Hey everybody, it's JJ from the Trading Syndicate for our weekend update for the 8th of March. Interesting things going on as usual. Never a dull moment in these news cycles. Fortunately, I wish it was better news, but let's get to work and dig into these charts and see what your options are and what you should be looking at and what you should be thinking about. Now, I'm, when in doubt, zoom out. I want to bring your attention to something that happens in these markets, and it's the reason is because of the way the markets are built. Okay. Anybody who's ever taken a company public will tell you the way you structure a company and who holds the stock will affect how the company trades. Okay. There's no getting around that. If a stock has a very tight float and it's very tightly controlled by a group of insiders who get along, the stock will just keep going higher and higher and higher, especially if those investors have deep pockets and they don't have to sell stock to pay their rent. Okay, so those large investors, they can afford to hold. They've got deep pockets. As long as the price of the stock goes up, they can take loans out against it so they don't have to sell it and pay capital gains. Learn the system. Okay. That's why these markets, after you'll see any kind of large sell off in this crazy thing, you will see sell off, new high, right? Sell off, boom, 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 new high. Sell off, new high. Distribution, boom, and then new highs again. It's the way it's built, folks. So look at companies, even companies that are hot right now, like Bloom Energy, B, right? You look at Bloom Energy, and the thing was in 2020, it was $3 a share. It's trading at 135 now after going to 180. Okay. That company, you know, that company, for example, and it's not an S&P stock, but just look at see how structure works, okay? They got 264 million shares in the float. 87% of it is institutionally owned by people who have paid for it and bought in cash, okay? 6% is insider owned and 10% of the float is short. Okay, so out of 264 million shares that are available for trading in the Depository Trust Corporation, DTCC, right? Held through seed, right? 264 million shares are in the system. 11 million shares trade a day. 4% of the float trades a day. The 25 million share day is a big day for that stock, right? Let me go and show you the chart. And you can see the lesson of cost basis, right? Everyone's cost basis is here, right? They can take loads out 10 ways till Sunday. You own the stock at, $13, $20, right? And it's trading at 135. Your cash problems are, you don't even have to sell it. Okay, so cost base is everything. These markets represent Apple, Microsoft, all these large stocks that are institutionally owned by holders who hold them for 30 years, 40 years, 50 years, and even longer because they have trillions of dollars of cash, as my buddy Buckwheat would say, cash. And what these large moves down, they are what we call margin call heists. So people who own the stock, investors, right? Or large hedge funds who don't, aren't subject to margin calls because they've got the scratch, right? They've got the dough, right? They can buy and reset their cost basis, right? If you were a seller up here at 6,300, you reset in that little temper tantrum of April, May, right? We are due for another reset again, right? As the year sort of plods through, right? We're in April, March. We usually try and get one of these big liquidations so the size traders can reset their cost basis, right? Because people don't want to spend over 7,000 anymore on the S&P. You get a little bad news cooking, right? Sprinkle that with a little bit of AI, right? And you've got a beautiful, I think we're going to come longer term and test that 200-day moving average at 66.82. And then I'll be looking for a look below and fail of 66.21. That is lower a dip into it and then back up. We'll see if that happens again. And we'll keep you apprised. Sure, there's going to be sellers at 67.49 because all of the inventory is parked above it. So all of the people who are spec long, right, using other people's money, credit, they're going to get flushed out in a big move like they did here, right? The large size traders will reset their cost basis, buy more, right? And that's how business works, right? So we always mark to market higher, then reset the cost basis, and you know how it's a performance industry, right? Everybody got their bonus last month, the month before, right? So you see that this is a distribution pattern here. Does that and that look at all familiar? Yeah, they should because markets just repeat the same thing over and over and over again. Okay, and you can see, look at all the volume that we stashed away up here. We jammed a lot of people long up here, folks. So if we start taking these swing lows, right? So let's go take a look at those swing lows for the larger traders, right? This shouldn't just blather on where are our levels. So we're looking for 6686, right? Which is just above that 200 day. And then we've got a swing low down here at 6585. If that gets taken out, we'd be looking for 6573 and then 6487. Now, what if we don't get any downside? What if we don't get, just in case, right? There's the bearish case. I don't use that word, but people love it, right? What about, what if we crawl our way back over 6749, back over 6807, and make a run for that 6890? It could happen. Could happen. There's a lot of inventory here. We'll see how sticky it is. And now you're going to see what the buying retention is of that inventory. Now that's a word that those are two words you'll never hear on CNBC. You'll never hear those two words uttered anywhere except in small diners in faraway places and dark corners where people have meetings that nobody know that they're having meetings. Buying retention is what is the percentage of people who are long in that area who will hold and maybe even add on if it breaks that area, right? So why I know about it is we used to pay people to bring buying into a stock. So if you bring in 1 million shares of buying, we'll give you 200,000 shares, right? For free. Or we'll pay you 200 grand in cash, if it's a dollar stock, right? So you bring in X amount of, but now the thing is, if you bring in 1 million shares of buying between $5 and $6 and the stock breaks five, how many of those shares of those people are they going to puke out? 60%, 70%? We'll see, right? So far, these markets have good buying retention because we're operating in a low volume environment. Because out of billions of shares in the system, only a fractional percentage of those shares in larger stocks trade on a daily basis, right? And it is much easier to mark up markets where there is less volume. You don't need as much buying to do it because you don't have as much overhanging supply. These are simple, simple mechanics of how markets work, right? Good for you to know so you can not get caught shorting the lows and buying the highs. And that's what we teach at the trading syndicate. Okay. So let's see if that happens. But those are the levels we have to the downside. And 6807, 6837, and 6890 are our upside levels for the larger term traders. Four, and here's that inventory again. You can see it. You can see it. It's all just boom. These are all. Now you'll think, "Oh, well, aren't those short sellers?" No, because the markets are intended to get people long, right? We take supply and we sell it up here. We put it on sale. And so we'll be looking for those lows down here. That's a lot of inventory. Let's see. It's always interesting, but a good flush is needed. Now, um, do do do. So swing traders, right? We got something for everyone here, right? It's like the old Burger King. You want it, with ketchup and mayonnaise, we'll make it that way. All right. So swing traders, we got our cost basis here, okay, on a 4-hour candle wax, right? And we've been going up, back, up, back, up, back, and down. This 6714 level in Globex tonight is going to be very interesting for you. If we take that out, you'll be looking for these areas here like 6690 and then down here at this little cluster just around 6600. right? That's if we get, you get that Sunday night gap down. Sometimes, something bad happens and the news cycle, everybody gets jittery and the order book just parts like the Red Sea and boom. So if that happens, look for a look below and fail of 67.14, right? We haven't been able to break it yet. The last two touches, this one was close, this one was closer. Let's see what happens tonight, right? If we cannot and we accept over 67.43, right? If the price accepts over 43, and I'm going to show you why, and we'll show you why with candles and with volume and market profile, because that's where the inventory was before the move up, and then they came right back down to it. So if we don't break that level of inventory, it means the wholesale longs don't have to sell under 14. Now, make sure you don't get that twisted. If the size sellers do not have to sell under 67.14 and a half, that means that they will raise price. The only reason you raise price is if you see buyers. So if those bids start coming in, and we're going to go to the next chart to show you, right? This is where the overnight inventory from Thursday night was. And then we have what we call a point of control, which is where the cost basis is. So you see, we closed underneath cost basis. Look, these are your lower stops and these are your upper stops. So generally what happens, because we had a liquidating event at the end of the day, what generally happens is if markets are under quote unquote normal operating conditions, we will try and take this inventory and sell it. Now you see there's a huge chunk of inventory up here. So, but they don't need to make much, right? If they take an average of 67.40 and get rid of it even at 50, right? 10 points at 52 on thousands of contracts is a lot of money. So look for that. If we stay above the close, look for distribution here. If enough people short it here and average up here, we'll get a move higher up into 67, 68. Okay. If we get a move lower, these are your lower stops. And if some reason we get a gap, you'll be gapping outside yesterday's or Friday's low at 67.16. And we can use the 1 minute candle wax to show you who don't have market profile. So if you are short and we get under 67.38, right? Short under 67, if we get under there, there'll be some areas here at 36 and at 34 where there'll be some bids. Okay, look out for those bids. On the upside, if you're long, there's going to be sellers here at 43, sellers at 45, and then your target will be 67.50. I'm using the cost basis from Friday because as you can see, it's clearly here, right? Time and volume traded is cost basis. You go sell it, you put it on sale, give it a little dip down here. There's a cost basis here, back up, right? If it's slow and boring, just look for this. Maybe to look above and fail, to look below and fail. So that's it for Sunday. And we'll have more coming this week. I am working on how to hold trades longer for longer time frame participants and size participants. And I'm working on that. I see they threw an outline out on X. I'm VWAP Trader 1 on X. This is Trading Syndicate. We're doing a thing which we don't really do, but we understand people are looking for answers and they're searching. Uh, if you trade up at tradingsyndicate.org, there's a 3-day trial to come. Check it out. Talk to me. See if you like the room. And if you stay, we only charge $19. That gives people who don't know anything time, because when you're learning, you need time to learn. Because you're not going to make any money at first. We're going to teach you how to make money. We're going to teach you how to do this with common sense. And you can see everything we do is based on common sense, no gibberish, no weird talk. This is where you buy. This is where you put your stop. These are the reasons for taking the trade. And hey, if the trade doesn't work out, this is where we get out. So it's like when you get on an airplane, you know where the exits are. So if you know the poop hits the fan, you and your money have a parachute, right? This is the only business where you can insure every transaction. Use stops. Come into our room. We'll teach you how to trade with common sense. We'll teach you how to make a living. If you're uncertain about your financial future, hey, everybody is. These are uncertain times. Come join us at Trading Syndicate. We'd love to help you secure your future. Thank you, everyone. Have a great weekend. Bye for now.